Folks, if you're with me for the daily financial news, you know I've been talking about a pretty wild and crazy housing market. We're going to talk to the man, myth, the legend, Brian Adamson, about what he is seeing. And maybe I am just blind in what I'm seeing in Fresno, California is not happening around the world. Let's bring him on. Brian, how you doing?
I'm doing good, Mike. Happy to be back, man. It's been too long.
There you go. There you go. I know we missed you. You had an exciting week-long challenge, and then you had some travel challenges getting back home, but we made it happen. So thank you, thank you, thank you.
Yes, sir.
So let's remind folks the market that you look at every day, right? Your buy box, your area. And then I would love to hear what's going on because I think the market is wild today as I've ever seen it, but maybe I'm wrong.
Yeah, I invest predominantly in Detroit, although I live here in Orlando. And it's interesting. I've been seeing more properties hit the market in the last 90 days than I
Oh,
have
great.
in the last 7 or 8 months. Um,
Really? Oh, that's
yeah,
awesome.
yeah. Now, I will say this, I'm not necessarily looking at single family. I'm
Sure.
looking at, 2 to 4 units daily though. Like I said, it had just dried up there for about 7, 8 months. And in the last 90 days, things have been popping on there more frequently.
Well, that is awesome because that is certainly not what I'm seeing and I'm hearing. So let's scratch that a little bit. So again, we're talking about Detroit,
Hmm.
Michigan,
Yeah.
2 to 4 units. So tell me about what's coming on. Is it the stuff that's well used and beat up? Is it the stuff that's been flipped or remodeled? What's coming on the market? Because I'm excited to hear that.
Yeah, very interesting. So I would say it's probably been close to 50-50, Mike, with
Okay.
the amount of inventory that's coming on that's beat up, really distressed. I will say that it's been coming on a little high though. And right, it's been
uh,
coming on a little high. So I think people are just trying to test and see where we're at again. But also, those renovated properties are starting to pop back up. I don't know if a lot of sellers were holding back on putting those things on the market, when rates went kind of crazy.
sure.
But we're starting to see a lot more finished product, also
Hmm.
newly renovated, come onto the market. I've been getting a lot of pocket listings lately, one of
Okay.
which I would share with a couple of my students who are looking for that in their buy box, where currently tenanted, which
Mhm.
I think I mentioned to you in a previous video. I've been shying away from those,
Yeah.
particularly because after rent moratoriums, it's been taking 6 to 9 months to
Oh,
evict people in my
sure.
market. So I've been buying them vacant, and I'd rather put my tenants in day one. You know what I mean?
Yeah. Oh,
But
yeah.
but I will say I've been finding that I've gotten 4 off market deals in the last 3 days, right?
Okay.
So and that in and of itself is another shot in the arm. I hadn't been seeing that in recent months. So
Interesting.
I think there's some panic for people who are holding existing properties that aren't cash flowing for them.
Ah, there we go.
Right? It's some panic. People are trying to get liquid. The pain, they feel the pain is coming. I think they're already experiencing it in their everyday lives, and so now they're
Okay.
trying to liquidate and get some cash in their pockets.
So I'm just going to keep scratching that because that is people will love to hear this, by the way, because again, a lot of people are struggling. There's not inventory. So maybe Detroit's the sign that it's the beginning. Maybe Detroit moves first and other markets around the country will see it next. So I'm just going to guess that Detroit is not for the weak, not for the weak at heart. It's a hard market to manage properties, especially if you're out of area. Is that fair?
I think that's fair. Yeah, I think that's fair. I think for people who try to self-manage, they get crushed, right? You
Yeah.
you gotta you gotta align yourself with the right property management companies that really understand the nuance of that market. They really, do a great job at tenant screening,
Hmm.
background checks, and all those sorts of things to help insulate you in that process. I think
Sure.
the people that get hurt are those that just think because it's affordable and there may be inventory that they go in and they get crushed relatively quickly. So, you
Yeah.
and I talk about this all the time. The infrastructure is everything. And so,
Yeah, it is.
yeah, you got to lean on that for sure.
Yeah. So one of the things I've said, and I think Detroit fits this, but you can correct me if I'm wrong. There's been a lot of out of state money pouring into Detroit simply because it's cheap. And you've heard me say it endlessly. You can go broke buying cheap.
That's right.
So maybe some of these people, California buyers or whatever, went to Detroit because it was cheap. Oh, look, I can buy a house for $1 from the land bank or whatever it is.
Yeah.
And now they're getting their lunch handed to them. Moratorium's taken 6 months. They don't have the infrastructure. They got lazy, right? They bought the deal before building the team, and now they're being wrecked. So yeah, maybe there's some, some like get out, right? We're seeing recession coming.
For sure. For sure.
It's
To that point, Mike, I bought three right before the end of the year. I bought 2 duplexes and a triplex, and 2 out of 3 of those sales were from California owners. Right.
aha,
So and they were, portfolio owners where they may have bought a dozen or 2 properties,
right.
and they were in the process of liquidating almost all of them. So, I think that's exactly what happened. They thought because it was inexpensive that they had the execution plan down. They quickly figured out they didn't. And now all of a sudden you're holding a bunch of liabilities instead of assets, right? You gotta do something.
Going broke, buying cheap.
That's
101.
right. Cheap properties are expensive, man. I say it all the time.
Amen. Amen. So this is good news. So again, if I want to play this out, so there's probably other markets like Detroit that attracted, I'm just going to call it California money or dumb money, or, hey, I mean, I've told you this and I'll repeat it again. If you're buying a property because it costs less than your Tesla, that's not a reason to buy a property. That's dumb. And I've heard that 100 times. I'm so tired of it. I'm going to make a t-shirt out of it. It
Yeah,
doesn't make it a good deal because you bought this house less than your Tesla.
that's right.
But I think there's a lot of people. So there are probably markets. So again, people watching this in other markets that may be similar to Detroit that attracted out of state money in droves for, call it, the last 3 years.
Mm-hmm.
You know what? Maybe your market's like Detroit and there's more inventory coming. Maybe Detroit's just first and others. That's it. I see that as good news, right? Let's
Oh,
let's
absolutely.
wash out the weak hands and give it to the good operators.
Absolutely. We've got some students operating in Ohio. They're seeing the same, inventory
Awesome.
is coming out, but prices are still a little high. Um, Georgia, we just had a student close a deal in Georgia on Friday of last week. So they're popping up, in these pockets if you can find them for sure.
Nice. So again, what I'm taking for this is, because again, I'm in a market of Fresno, California, that is, it's not easy to manage, right? There's some, but I've been there 22 years, got a
Mm-hmm.
team, process, procedures, all of that. But I know, right? If you're a Silicon Valley person and you buy in Fresno because it's close enough, and then you try to self-manage, you can get run over.
For sure.
And those are the listings that might be coming up. I'm going to pay special attention to that. So that's encouraging. And as rates come down, it's easier to pick these up in cash flow. And, I don't know about Detroit, but again, here's an idea, and I'm just playing with this in real time.
Mm-hmm.
So let's say you find that owner's got 14 portfolio properties, call it 30 units, and you see him selling off one at a time. I'm going to guess it's maybe possible he or she bought those for cash. So what might be an exciting strategy is, hey, let me sell or finance these with you. Let me come in with 10% down. Let's finance it at, pick a number, 7% interest only. Let me manage these for a couple of years, turn them around, and then I'll refi you. That gives them a better price, but also gives you better terms, because today you're going to have to put 25% down minimum.
Mm-hmm.
And, rates are probably in the mid sevens or maybe eights for investors. So I think that would be something I would try to do. What do you think?
Absolutely. Actually, a buddy of mine, trying to think how many properties was it? I think it was a few hundred properties that this buyer, father and son from California, they bought this portfolio. It wasn't in Detroit, it's in the suburb of Detroit, so price point's a little bit higher. It's about 11 million bucks worth of real estate. And we're working on doing a seller finance deal with them right now, for like almost those same exact terms, because they bought 70% of them cash. I think the 30% that they did have debt on, they ended up paying those down and off
Yeah.
almost over time anyway. They've had the portfolio for about 13 years. So they bought when everything
Oh, wow. Yeah.
was super
They're doing
compressed.
okay.
They're doing all right. They're doing all right. So, and they are open-minded to it. They wanted 30-40% down. So we've been negotiating to see if we
Yeah.
can get that, suppressed a bit. But yeah, those opportunities do exist, Mike, 100%.
And I think they're going to come more and more, because I'm just playing this out, right? If the chips are, hey, I built, because again, I see this stuff all the time. you're from California, you go to some other market, and it could be anywhere. It doesn't have to be California. It's just where I am, so that's what I see.
Hmm.
You got to go to some other markets because it's cheap. You start buying some properties. You have good fortune. Some is good, more is better. You double down, you triple down, you build this big portfolio. Then you get smacked in the face with reality, and you're like, I'm out. But you own them free and clear. You could fire sell them, but that's not what you're interested in. You did it for the cash flow. So a seller finance deal is the right idea. You lower their taxes, you give them some income, give them a little cash now. The real estate agent gets paid. You got to pay the agent if you're not going direct. And it could, and again, you could pay more. I would pay more dollars
For sure.
to get in for 10% leverage and a market rate. It's just the math works.
Absolutely. Absolutely. You know, on a 5-year buyout, you know, something
Yeah.
like that, give you a little bit of runway. I love that.
Yeah. So again, I'm excited. I did not know what I was going to get when I asked you, but again, so maybe the housing market is changing. Second home markets, we've already seen pain. Airbnb markets that are changing regulation pain. Maybe there are some cheap markets that attracted out of area money that are going to start to show some options. Get creative, learn your buy box, learn seller financing. I'm excited for the opportunities ahead, and I'm excited for you to keep bringing us this great information. Brian, where can people follow you?
On YouTube at Brian Adamson Real Estate, and then on Instagram at Brian Adamson Official.
Yeah, do me a favor, give him a follow, tell him you came from One Rental at a Time. So he keeps coming back and giving us this great information every week. Thanks, Brian.
Yes, sir. Thank you, Mike.